All right, this will be a daily outlook going inside of Tuesday, July 14th. Now, yesterday here was a pretty heavy sell-off, right? In fact, this level has completely disregarded the latest bullish PD area created inside of the range, right? That was the bullish suspension block. In fact, this daily candle cuts through the entire range. So here the market proves to me that we're still inside of a consolidation phase, and I did believe, because of the closure of Friday and overall the weekly profile, that it was enough for Monday to start trading higher, okay, to look to make a new monthly high. But clearly I was dead wrong about about this analysis, this bias that I had. Fortunately, we're in the business of making money, not on being right on moves. But it obviously does help, right, when you get it right, to be able to identify on the lower time frames a trading opportunity. Okay, so we can see that yesterday the sell-off coming from 50% of that suspension block. We know that the suspension block is important because it is located at 50% of the previous monthly range. So yeah, again, this to me, the market proving that it's still a day trader's market. Right now the market has moved from 50% back into discount, right? And we have to remember that in discount there's the range of a bullish order block from the previous monthly profile. There's obviously the previous week's low here, which is a large rejection block cutting from 25 to 75% of the range of the discount order block. So this is pretty significant here, right? The fact, this big down close candle here, the fact that it invalidates the suspension block here, it does kind of tell me that price will trade higher, but will trade lower, but I don't know if this will be enough to sustain the trend for the entire week, right? So what I'm saying is this might be trading lower for another day or two, and then might start moving back higher inside of the range. And the reason for that is because we had a gap lower, right? We had a gap lower at the open. I wouldn't have minded continuing looking for shorts if there would have been a divergence at the previous weekly high, which is not the case. Okay, so I'm definitely going to be interested in seeing how 25%, 50% here of the bullish order block, how these levels will be traded today. I mean, you can see that right in the near past, every time the market has traded inside of these levels, at 25, 50% of that discount order block, it has provided a reaction, right? It has provided high resistance price action on the lower time frame. Okay, so if price will first move higher here, right, then I would prefer a daily profile that will allow me to target 25 or 50% here of the discount order block. But if the market will first trade lower here, then in that case I would prefer trading, right, or identifying a daily profile being New York reversal, right? Or if not, I would suspect that it can be swing to Z, right? But what I don't believe is that if price opens, doesn't first start trading higher, right, and simply trades lower, that it'll displace the range. And the reason for that is simply because overall the range is pretty high resistance here. This order block has proved many times to hold price as support, right? And I just don't see why it would be any different right now. Okay, so 25, 50% here of the order block are, in my opinion, good targets, okay, in case of an open high low close profile. But again, for that I would prefer seeing price first trade higher to then trade lower. And if price will have traded lower coming inside of the New York session, in that case I would probably be interested in seeing price reverse back inside of the range, or price, right, do something like this on the lower time frame around 25, 50, 75% of the daily order block, and overall the rejection block of Wednesday, which is what created that previous weekly low. Again, if this were to happen as a reversal, in that case, I do believe that, well, okay, we can look at this here on this chart on the 4 hour. But I was going to say, in terms of a premium target being the opening range gap from yesterday, I do think that if today will be an open low high close profile, price should likely create the high of the inside of that range. I don't believe that it can make a new high of week here on Tuesday, right? If it does something like this, and in that case, Wednesday might then trade higher. We'll look at that opening range on the lower time frames. All right, here the 3-week look back. Let's remember we had 3 key levels, okay, from the range that we're trading in. We identified a bearish order block at 75% of the range. We identified a bullish order block located at equilibrium of the range, and we had identified a bullish order block located at 25% to range low. Right then, and what you can see today is that the market here has had a market structure shift. To me, this is pretty significant market structure shift, because the low of Friday here was an intermediate term low, right? As we saw, this was a New York reversal profile, and the market from the open, right, revisits 50-75% of the new week opening gap and trades lower, right, creates a market structure shift. But most importantly, that bullish order block located at 50%, and when the market did this, now becomes a bearish breaker. And in fact, you can see that the New York session here spent quite a lot of time reaccumulating inside of the lower half of the range of right, what at the moment became a bearish breaker. Right, and then from the reaccumulation ended up sending price towards the range of the discount order block. Okay, and eventually, the closure near the upper half here of this discount array. Okay, so I mean, looking at this so far, it does seem like price will want to test 50% of this bullish order block. Is going to be important to me to see the reaction there. Now, obviously, if there is a reaction, at what time of day does it happen? If there isn't a reaction, right, and price leaves fair value gaps through it, then for the New York session, if price won't find a reaction here, right, coming inside of New York, and then New York opens at these levels, unless New York first trades back into it, right, in the case that there's a fair value gap near these levels, this doesn't have to be a 4-hour fair value gap, I'm just saying a fair value gap on the lower time frames, right, unless New York were to first trade higher inside this gap to then trade lower, I would be careful about looking for shorts, right, even if this is displaced, because in the perspective of a 3-week look back, you would be selling from a deep discount. And also the market has proved overall to be inside of a consolidation, right? If you look at, well, obviously we saw here 50%, right? Price always trades back into it, comes back to discount, back into it, then back into premium, back into it, right? Every time it trades to extremities, it comes back to 50%. But overall, you can also tell that price is in a consolidation because of how many divergences it's creating with the S&P 500 around key liquidity pools. And so this is what I'm saying, right? If the market's going to open and expand lower, okay, because of the fact that it's still in a consolidation, again, unless it would first come back in the range, reaccumulate around 50% of this level to then trade lower, I do think that this can lead to high resistance price action, or can lead to a scenario like this, right, where Nasdaq takes out the previous weekly low, the S&P 500 fails to do so, right, and from there either chops or creates a reversal. Okay, so in terms of discount targets, I do like 50% of the discount order block. I do like also the low of it, right? Again, since price comes from a market structure shift, I can see price trading to these levels definitely. But first, I want to see what's happening inside of right in the middle of this range. Uh, right, and then obviously there's many scenarios as to what this could look like coming inside of New York. But the only thing again that I would be mindful of is if New York will already be opening below this level, and you still believe that price is bearish, then ideally you want to see price first trade higher before trading lower. Again, because of context, consolidation, being in deep discount. And on the other hand, if price, say, were to trade to 50%, okay, or the lower half or whatever, and find a rejection, okay, this rejection can be already found inside of New York or done in New York, then I do believe that the drawn liquidity for the day, or at least the low hanging fruit, should be this, right? The 930 highs, well, the opening range high of yesterday. Okay, as just like it did for the new week opening gap, right? Opening, trading lower. It did so also for as of 9:30, right? As of regular trading hours open. But this is a pretty significant gap down here, right? This here is a true liquidity void. And so because of that, right, if the market were to find a rejection inside of discounted levels, then I do believe that will become the drawn liquidity. Okay, so premium targets, we're looking back inside of this breaker essentially, right? The low 25, 50%, 25% aligns with the opening range high, or at least around it. The lower half of it aligns with this level. If not, okay, if price never respects these levels, then we're looking at a drawn liquidity being the previous weekly low. And again, if you're going to be trading this, just watch out where New York opens. Okay, if New York opens too deep in discount, I personally would be careful about shorting, or at least I would require some kind of shakeout back inside the range before trading lower, right? New York creating some kind of intermediate term high, and then from there can keep on trading lower. Okay, if you look at a 3-week look back, we can see that price came from a classic buy to a New York reversal. Okay, so this means what? Expansion, retracement, expansion. Right, and now yesterday's profile was a classic sell. Okay, so we had expansion, retracement, expansion, reversal. Okay, in fact, the intermediate term low here being broken, already coming inside of New York. Eventually New York ended up reaccumulating then around this range here, which as we had looked at was the PD rate located right at 25% here of the dealing range. All right, New York reaccumulating inside of these levels. Personally, in the moment, I was using the 15-minute wick. Right, you can see price coming back in pre-market, creating the New York highs right at 50%. Eventually, the opening range and 10 a.m. making their highs at the lower quadrant of this range. Okay, so pretty bearish price action here. Okay, so now in this case, since the 3-day look back is essentially where we are at the open here, I think I'm just going to use the same level that I had marked out coming inside of Monday, right? As those levels proved to be sensitive for price action. There was the range of here, the rejection block at 25%. We had analyzed a bullish fair value gap located at 50% of the range. But you can see that this definitely did offer trading opportunities. On the lower time frame, right, you can see the Trump tweet event making a low right at 50% of this order block. Price ends up trading back higher, back to 50% of the rejection block before then trading lower. Right, and we had identified that in discount we have the range here of a bullish order block and a bullish fair value gap. And again, the reason why I'm going to be using the same levels that I had on yesterday is because overall this is currently the hourly dealing range that price is trading in. We have an intermediate term low, we have an intermediate term high, right? And price is essentially opening here today near 50% of this range. Also, right, from a 3-day look back perspective, we're already opening at the low here of the range. And if you look at the previous daily range, price was high resistance here around 50% of that range, and so sure, you'll find some kind of level in here if you really look, but I feel like because price spent too much time in here, I would essentially be cherry picking these levels, right? Like, maybe could it be this wick? Sure. Could it be this order block? Sure. It could be many levels in here. Could it be this fair value gap? Sure. But there's nothing too obvious for me inside of this range. Okay, so that's why in this case, right, even though the range low here doesn't align not in the range of 3-day look back, but it is technically still the dealing range that we're trading in at the open today. All right, and also yesterday, right, it did not make a new high or low, right, from this range. It simply opened inside of the range, it gapped lower, traded higher to the NWAG, and then traded lower. Okay, so these are the levels that I'm interested in. Sorry, I had to pause the video for a second there. Essentially what I was saying is I'll be using the same levels here from, even though they're not part, right, this one, the one in discount is not part of the 3-day look back, but overall this is the range that we're trading in, right? As yesterday failed to create a new high above this range, I would prefer keeping these levels on, at least until we get here on the perspective of a 3-day look back, a new range high, range low, and then from there I'll be updating these levels. Okay, so let's do a quick recap. We analyzed the daily chart. We saw that price is still inside of a consolidation environment. We had a big sell-off yesterday, right from 50% of that suspension block. Okay, so the market has moved back from equilibrium to discount. Okay, so I'm going to be interested today in seeing how 25, and especially if it's traded to 50% of the daily discount order block, okay, how these levels, how price will react to these levels. Okay, so I think that's it. In terms of drawdown liquidity, we'll look at that here on these levels. Right, in terms of drawdown liquidity, we said that if the market were to find a reaction, okay, around 50%, right, or even at these levels, say for all it matters right now, then in that case, that would interest me into a drawdown liquidity in premium being the regular trading hours high from the previous daily profile. Okay, so essentially back inside the range of what is currently here a bearish breaker. If not, in terms of a discount target, right, we have the previous weekly low, and then we would have the previous monthly low here. But again, only concern I have is just pay attention if New York has two, right, opens deep in discount. Okay, in that case, if you're going to want to short, in my opinion, it's best to wait for for pullbacks inside of the range. Ideally, you want to try and time these, okay, with the quadrants or with fair value gaps / order blocks created on the lower time frames around these levels. And also pay attention to divergences at the previous weekly low. And the reason for that is because the market has obviously proved to us many times that this is a sensitive level. Okay, so again, I don't see why it would be any different this time. Right, and watch out for any divergences created here. Okay, if there is one, it most likely will be Nasdaq that trades under, while the S&P 500 fails to do so. And on a 3-day look back perspective, we analyzed the phase of price delivery. We saw that price came from a classic buy to a New York reversal, right? So expansion, retracement, expansion to reversal, right? So we had expansion, retracement, expansion, expansion, retracement, right? And eventually an expansion lower. And what I was saying was, because price is currently opening near the range low of the what is currently the 3-day look back low, and also because price has failed to create a new high right inside of overall the dealing range that we're trading in, right? The dealing range being what here? Being the previous weekly range at these levels. I'm for the moment, at least for today's daily profile, I'm still want to keep the levels that I had on yesterday, right? That these levels prove to be sensitive. Okay, so very interesting PD right here, the fair value gap. This aligns with the rejection block. It aligns with the 4-hour discount order block. So I do expect some kind of reaction to happen there. Now you're going to need to see if it's this or if it's this, right? Okay, so we looked at basically everything: structure, drawn liquidity. We looked at phase of price of delivery. So I think that's going to cover it for today. So good luck and good trading.